What we have here in this chart is called the Morgan Stanley Commodity Related Stocks, called the CRX.X weekly chart. Let us not forget the weekly. Let us not forget that we're in a bear trend reversal from this was over here was a 2010 breakout above resistance to the top. Let's get that straight. Then when we get over here, this is where this diagonal trend line comes right over here where we broke on the second weekly big down. The third diagonal trend line is where we come right down through this channel here, and we can clearly see that these pitchforks are going the right way. And the very top, we come right down through the bottoms of these weekly areas, right down to that point there, and right across these ridges here, is that's where we bounce on that big weekly wick. And we're in a weekly sell signal on the commodity related one now. Now, when you take a look at how to compare the Dow Jones with it, the Dow hits a big, because you got some of these in here that are Dow components. These are the names that are in here now. You got Alcoa, BHP, BHI, you got FCX, got Goldcorp, Hess, people like Newmont Mining, got Potash in there, Slumberberger. These are the names that are in that weekly index there, and some of them are in the Dow 30, okay? But you can see how the Dow big reversal was happening in its 3-week top. We went up. These are the trend lines. These were the breakout points. These were the secondary high reversals. First reversal happened here, second and then third, as you know. The thing about this index here is it's following suit perfectly. Buyers came in. It hits this trend line right here. That's where you consolidated on a weekly level. When you started to break higher, you went from here to that bar right there. And the breakout started right here. That's the link to the correction from the high to the current low where the bounce came in. Now, this trend line down here, which comes right through this old artery right here, where this was part of that 7-week reversal that started here now. And we can clearly see that there was a point where we had that rally back above it, but then we got back above these diagonal trend lines. These are called necklines here. And we went straight down and we went hard. Now, on this here is a weekly sell signal. The 10-week, the 20-week are going down. The 100-week has got support. In a bear trend bottom-up trade now is how they come up. And this is a major resistance level, this neckline. This is where the breakout started, that trend line. If we get up above it, of course, that's the neckline where we broke down to this, last bit of exasperation in the sell side program. So we're going to be watching this weekly sell signal here and how these weekly moving averages are all pointing down, and how you went from a great bull and then how you broke down in the 2011 area in the commodity related names. And the FCX is one that we trade in here. Look at that, down to $45. Look at that Hess, getting cheaper all the time. Look at that SLB. Look at that Potash in there. Look at that Apache. Look at that one. These are names that we trade. They're listed names. Look at that Devon. Look at that BHP. But more importantly, that APC. Look at that thing. That thing was moving real well off the bottom up now. So basically in the trade management, there are bear ETFs that go with these reversals, and they're the bulls that got slammed that go back up in value related to this index here. And most importantly is you can see the knife hook of last Thursday and Friday. These big wicks in here is where short covering, and this is the major bottom. You know that this is the major bottom, but let's just blow up that right there. Look at that wick. Now, same thing over here. You know that this is that bottom trend line where the double top resistances were broke. It's very important to have clarification that the first pass at the 200-week on the Dow and that big wick and getting back up above, this is that next neckline here that we drew where the reversals were coming in with these pitchforks, and then the top down here to where it closed in the body. But that's the full length from the very top of the year right there, and that's on the Dow Jones now. And the thing about it is you can see how both indexes work. Trade management moving forward, calls, put options, bears, bulls, ETF management,